Hello and welcome to the Post-Election Policy Outlook webinar by NAAHL, the National Association of Affordable Housing Lenders, in partnership with the Center for Community Lending. Thanks to everybody for joining us today. I also want to particularly thank our sponsors. We have 26 sponsors for today's webinar, which is part of our replacement as an annual conference. In particular, I want to thank PNC Bank, which is our lead sponsor for today's webinar and for all the ensuing webinars that we will have over the next few months. And the focus of those ensuing webinars will be racial equity and justice and affordable housing finance. So we're looking very much forward to that. Please stay tuned for more information on that as it becomes available. Today we've got two great guests who are going to be informing us about the outlook. They are Dwight Fettig and Brian Blum from Porterfield, Fettig, and Sears. PFS represents NAAHL on the Hill, and they do a great job. Dwight and Brian both have extensive experience on the Hill and off the Hill, and are really among the experts in our field. So we're very appreciative to Dwight and Brian for joining us. I also should probably make a disclaimer insofar as I am part of the Biden transition team. Just to be clear, nothing I say reflects the transition team or any information that I may have gleaned from my work on the transition team. This is all being done totally separate and apart from that. So we've had quite an election with a change coming to the White House and of course to the Congress as well. And so Dwight and Brian, let's start there. What just happened? And like who won, who lost? What's going to happen next? So why don't you kick us off? What happened?
Sure, I'll start. And thanks for inviting us, Buzz, for the discussion. We're looking forward to it. So as far as the big takeaways, honestly, Republicans and Democrats can both claim victories from the election. I think the only clear losers were the pollsters and some of the pundits, which expected it to go slightly different. A lot of pundits had predicted a blue wave. That of course didn't happen. It was kind of more of a choppy wave, if you will, at the top of the ticket with kind of a red undertow, with a lot of Republicans winning back seats in the House and kind of minimizing their losses in the Senate. And also Republicans did okay at the state legislature level. But it's clear there remains a large urban-rural divide in this country. The battleground states in 2016 remain battlegrounds in this election. The Democrats rebuilt kind of the so-called blue wall in the Midwest with Pennsylvania, Michigan, Wisconsin, but it's not a sturdy wall. For instance, my home state in Wisconsin favored Biden by less than 1% this year. They favored Trump by less than 1% in 2016. So the point is that we remain divided as a country, and that's going to have an outcome on governing going forward. I guess just some few takeaways or surprises from the election. Of course, the biggest surprise on the Democratic side was Biden winning Georgia and Arizona. Those states, of course, haven't voted Democrat since the 1990s. And then Republicans actually won back some seats in New York and California and along the southern border, which was not fully expected. So where they stand right now, the House, there's still about 6 seats that have not been called, but you have 221 Democrats at this point in the House and 208 Republicans in the House. So it's a very slim majority. It's much slimmer than it was this Congress. And again, Speaker Pelosi, who's obviously a very experienced vote counter, has her work cut out for her because she can't really lose any defections in this new Congress. And same in the Senate, of course, very, very narrow majority right now. The Republicans holding 50 seats with the Democrats holding 48, but of course the two outstanding Georgia seats are very important. So I'll turn it over to Dwight maybe to add to that and just talk about what exactly that divided government means for the next 2 years.
Yeah, thanks, Brian, and thanks, Buzz. We really appreciate having the opportunity, and we're looking forward to this conversation today. Let me just add to that, Brian, and say, you know, the lame duck session is getting underway, and I don't know that certainly I can't remember a lame duck session where control of the Senate was also going to be at stake right after it was over, and so that puts just a whole different kind of layer onto this particular lame duck session, right? Which was probably going to be challenging enough the way it is, but that just adds a whole nother challenge given the political dynamic of control of the chamber being at stake. And I'll just say a little bit on the Georgia races before turning my attention to the lame duck here real quick. You know, in terms of the Georgia races, there's no doubt that historically Republicans have had an advantage in those runoffs. In places like Georgia, frankly, the runoff system was in part designed, I think, for an advantage that way. But what we don't know is how does this situation, voting in a pandemic, voting more by mail, control of the chamber at stake, both sides sort of really putting a lot of time and effort and resources into these two specials or runoffs, I should say. You know, we just don't know if that's going to be a different dynamic. And obviously Biden having narrowly won Georgia now in somewhere in the 12 to 14,000 vote range also is just a different twist on the state of Georgia. So so I think there's enough uncertainty, but I think a lot of analysts who frankly weren't 100% accurate about the general election are probably giving an edge to the Republicans here. So we're going to proceed with a sense that there's probably a divided Congress with control, Senate control by Republicans and House control by Democrats, as Brian said. But Brian's right. Both Pelosi and McConnell or Schumer, if their Democrats are able to pull it off, are going to have the narrowest of majorities. And obviously in the Senate, they may not be able to lose any votes, given it could be 51-49 or even 52-48. So that's going to be a really interesting dynamic. In terms of how that affects the lame duck, real quick, you know, there's a couple of really big ticket items that sort of need to get done, the must pass, if you will. And that, of course, is the continuing resolution to fund the government. As everyone knows, that expires on December 11th. Congress is either going to have to complete all of the 12 appropriations bills so that they can complete the FY 2021 funding process through September of next year, or they're going to have to do another short-term CR that kicks the can down the road and into the new Congress and for the Biden administration to deal with as part of those discussions. The appropriators, of course, are making all the right signs or sending all the right signs and signals that they want to get a bill done this year before they adjourn, and so that they complete all of the spending bills. But there are some big hurdles to get through, and they're probably going to need an extra week. Right now, the December 11th is a Friday when the CR expires. It is not unexpected or would be actually very common and likely almost for the Congress to give themselves another week and extend until December 18th. So we expect that could very much be the case. And then along with appropriations, you know, you've got a defense authorization bill that gets passed every year, and that's typically going to get done, but has some even some financial services related issues connected to it that may get resolved. And then the other, you know, sort of outstanding question is, can issues like a COVID relief package that has a lot of, remember the CARES Act has some expiring provisions, and a lot of the assistance, as we know, has run out earlier in the year. And so whether or not a COVID relief package is possible during the lame duck is also impacted by, I think, these political considerations around the Georgia runoffs. And I would say right now, there's a lot of skepticism on Capitol Hill that a COVID relief package is doable. There's been no real talks at this point. We're early in the lame duck, but we got Thanksgiving coming up next week, and then we're only going to have a couple of weeks in December, maybe 3. And so it's a short amount of time to reach a deal that's been elusive for the last 6 months or so. So the lame duck could also deal with some tax extenders. And there's always a few sort of legislative cats and dogs, if you will, but those are the big ticket items that we're going to be sort of dealing with in the lame duck.
I see we're already getting some questions in the Q&A box, so I want to encourage folks to send those in. One of the questions is that California is responsible for the bulk of Biden's popular vote margin. Does that have any significance for what happens going forward?
Maybe I'll try that one first, Brian. It's a good question. I don't know that everyone's sort of making that distinction as to where the popular vote sort of difference is sort of coming from. I will say that certainly Democrats like to highlight the fact that this popular vote total is going to be probably twice what it was for Hillary Clinton in 2016. Some of the estimates now are that the combined vote total is going to go up to about 158 or 159 million total votes. Remember, that's compared to 137 million just in 2016. And by comparison, the highest vote total any single presidential candidate ever received before this year was Obama in 2008, when he got 69.5 million votes. Well, both candidates have blown right past that, right? So Biden's going to end up with somewhere around 81 million votes. But Trump's going to go from about 63 million last time to 73 million this time, maybe closer to 74 million. So he saw an increase, but obviously so did Biden over Clinton. And so I don't know the distinction's really going to be made that California accounts for such a huge part of that vote total. But I think Democrats are certainly going to highlight the popular vote total as part of why the Biden administration has sort of the mandate that they want to claim they have.
Yeah, maybe the only other thing I'll add, just a slightly different view. I think that both parties clearly going forward, I think that the Democrats, they're worried about being a coastal kind of party going forward with kind of the East and West Coast, and they certainly they won back states in the Midwest. I think Republicans going forward, they're clearly going to have to shore up their support in the Southwest and certainly in Georgia and North Carolina. So I think both parties are going to be taking away kind of lessons learned from this, that there are new battlegrounds kind of going forward.
Do you guys have any question about whether the President Trump will actually leave office?
I actually no, I really don't. I mean, I know it's been a painful couple of weeks, and it's kind of a sign of the times, unfortunately, that more foreign leaders have called the President-elect Biden to congratulate him than Republican senators have. That probably is not a great sign of the times, but I think we're getting much closer to that. And I think as all of these lawsuits fail, and they're failing, on a daily basis, it's becoming pretty clear that states will be certifying those results. The certifications, by the way, are going to be happening now in the next couple of weeks, and the lawsuits failing and the certifications happening, I think will just kind of spell the inevitable. And so I'm not too concerned about that at the moment.
Yeah, it's 2020, so anything is possible. But I think that come January 20th, Biden's going to be sworn in as president, and he's going to move into the White House, and I think it'll all get sorted out well before then, and Trump will leave on January 19th.
So this may be a bit of an inside baseball question for some of our audience. In the lame duck, do you expect just to see a continuing resolution of current level funding, or do you think there could be at least some regular appropriation bills, perhaps as part of a small package or even a very large rolled up package?
Yeah, I'll start there, Brian. I actually think we could be, and this is for inside baseball purposes, we may be headed for a cromnibus, which is a combination of a CR and an omnibus. And what that, of course, means is some of the 12 bills could get resolved, right? And you could have, completed fiscal year spending for some of the departments and agencies, but you may have some, Department of Homeland Security comes to mind, and a few others that have been trickier to navigate, whether it's been things like the border wall funding or issues like that that have been complicated. And in those cases, then what Congress has done in the past is they say, well, we're going to have to live with a CR, meaning we're going to stick with the current fiscal year's funding levels and no new changes in terms of sort of related policy items either. And so in that case, you could have 6 or 8 of the 12 or 10 subcommittee bills completed, but then maybe you have a handful that require a CR to cover their funding, and then you have a cromnibus. So we'll see. In terms of a large package versus small packages, the president has made clear, and we know we had a shutdown of 35 days at one point earlier in the Trump administration, so we can't assume that would never happen again. But he made clear he doesn't like these large 12, all appropriations bills, all 12 wrapped into one. So if you have to divide them into 2 to kind of appease them to get them to sign them, I guess that's not a big deal procedurally for the Congress, but that may be where they end up. But it could be a hybrid.
And do you see anything in the bill that would fund HUD and also transportation as part of the same bill that would prevent that particular package from moving into a regular appropriation as part of perhaps one of these sandwiches or cronuts or whatever you call them?
Yeah, good question, Buzz. I think based on what I've seen and heard from from Senate, from the Senate T-HUD folks, my sense is that Collins and Jack Reed have been able to, Susan Collins, that is the chair, and Jack Reed, the ranking member, have been able to kind of historically work through their bill pretty well, and that's the case up to this point. The ranking Democrat on the full appropriations committee, Pat Leahy of Vermont, highlighted some of the concerns that he had with the bills that Chairman Shelby laid out last week when he put forward the 12 Republican subcommittee bills. And T-HUD items were not in the sort of short list, at least, of main concerns that Leahy had. So my sense is that's one of the ones that would stand a pretty good chance of getting worked out and could get completed.
Great. So anything else we should be thinking about in a lame duck? Do we see any likelihood of the acting controller, Brian Brooks, being advanced for confirmation?
Yeah, good.
For that matter, yeah. I should ask about the Fed governor nominations that are outstanding as well.
Yeah, Brian, I'll turn to you on that one.
Yeah, so there are 2 vacant positions at the Fed Board of Governors. One, it's actually kind of interesting, was supposed to be filled this week. Judy Shelton, who was somewhat of a controversial nominee, we're going to find out very shortly if she has enough votes. There's a few senators that are out for different reasons, so that's going to be a very, very close vote. And then there's another Fed Board governor who will likely be confirmed in the coming couple weeks here. So that kind of has taken priority for the Senate Banking Committee and for the full Senate on financial services kind of confirmations. At this point, it doesn't seem like Brian Brooks will be confirmed as kind of the permanent director. Last we spoke right before the election to the committee, he actually still, his paperwork was not finalized and into his office, and it just doesn't seem like that's the priority nominee right now. I think that the Republicans really want to try to fill these Fed spots before moving forward on any other financial services nominations.
Okay, great. Well, let's turn the calendar to 2021, and we'll have a new Congress in place. And what do we think that means for the key committees that affect affordable housing and community development? the authorizing committees, the appropriations committees, and the tax committees.
Yeah, I'll start, and Dwight, you can, let's start with the House. So kind of the committees of relevance, as you said, financial services, ways and means, appropriations. At the financial services level, the leadership will stay the same. So Maxine Waters will remain the chair, and Patrick McHenry will remain the ranking member. The only slight change there is for the housing subcommittee. There will be a new chair, and that could be Emmanuel Cleaver from Missouri or Al Green from Texas. And the Republican lead on the housing subcommittee will remain Steve Stivers from Ohio. As far as, and then same on the Ways and Means Committee, you have Richie Neal as the chair. He will remain. Kevin Brady as the lead Republican. So the leadership will not change. That's different on the Senate side, which we'll get to in a minute. But as far as kind of the Financial Services Committee agenda, Chair Waters continues to say that housing is a priority. She's obviously going to be very busy, one, kind of giving cover, I think, to a lot of the regulatory movement that's going to happen under the Biden administration. She's going to be focused on promoting diversity inclusion initiatives. There's a few non-relevant issues such as cannabis banking, fintech regulation, data security that she's going to look at, but she continues to say housing affordability is a priority. And then on the Ways and Means Committee, they continue to kind of work on low-income housing tax credit expansion, and so that remains having strong bipartisan support. But maybe we can turn it to the Senate, Dwight, if you want to talk about Senate banking and Senate finance leadership.
Yeah, no, I'd be happy to. And as many of you probably know, those are two committees where we're going to have change no matter what, regardless of whether or not Democrats or Republicans are in control of the Senate. And that's due in large part because, as I think many of you know, Senate Republicans, much like their counterparts in the House, have term limits when it comes to their chairmanships and ranking member spots in the Senate. And because of that, the current Banking Committee Chair, Mike Crapo of Idaho, has the opportunity to move over and take over the Finance Committee, where Senator Grassley from Iowa is term limited out. And so given those dynamics, you're going to have a new top Republican, whether it's chair or ranking member at the Finance Committee in Crapo, who obviously knows housing issues and understands these housing tax credits issues, both from his time at the Finance Committee and his time at the Banking Committee with the housing jurisdiction that they have there. And so that's a move that's occurring. And because of that move, that means Senator Pat Toomey from Pennsylvania is next in line for Republicans to be the top Republican on the Senate Banking Committee. Some of you may have noticed, but in case you missed it, before the election, Senator Toomey also announced he would not run for re-election in 2022 when his term is set to expire. So he is going to have that role, whether it's chair or ranking member, for only the 2-year period. And that means a lot of attention is already going to be placed on Senator Tim Scott from South Carolina, who would then be next in line after Senator Toomey. And so there'll be a lot of people keeping one close eye on what Senator Scott from South Carolina is thinking on some of these issues. And in terms of housing, Senator Toomey did indicate, there's a few key issues he's interested in, and he's demonstrated some interest in over the years. And when he talked about issues he would focus on as chair, he did mention GSE reform, which, as we know, has been a topic that with Director Calabria and Secretary Mnuchin, there's been a process underway to try to see if Freddie and Fannie could start to rebuild their capital and be spun out of conservatorship. So that will be an ongoing area, as it has been for many years now, but one that Senator Toomey specifically mentioned.
You think there's really appetite to tackle GSE reform?
Boy, after 12 years, I think we're all skeptics, right? And especially in such a closely divided chamber, and then if it's split control, it just seems like that makes it even more challenging. Add on top of that, Buzz, the layered dynamic of a Supreme Court case around the constitutionality of the single director single director structure of the FHFA, much like the CFPB, and with a Supreme Court, case being heard on December 9th, and likely a decision by the court on that constitutionality question by the end of their term in late June, you could very well see a similar situation there that you have at the CFPB, where the president is able to fire someone for cause, and that could lead to sort of Calabria's term being shorter than is originally scheduled. So so that's just an added sort of dynamic to those GSE reform kind of discussions.
And Brian, you mentioned that Waters could give cover on regulatory action. Can you talk a little bit more about what that means?
Sure. I think, it's funny. I think a lot of Democrats wanted to be on the oversight committee when Trump was in office. I don't think it's going to be as popular of a committee. It usually isn't when you have to kind of defend your own party. So I think that there's no doubt with a divided Congress that there's going to be a lot of action with the federal agencies and rulemaking. And so certainly the top agency that comes to mind is CFPB. Trump and Biden have very differing views on kind of the direction of the CFPB. And so I think that Chair Waters is going to be working kind of in tandem with the Biden administration on ensuring kind of that the agencies are defended in a lot of their actions.
So that sort of raises a couple of questions for the incoming administration with respect to their nominations in particular, and really as prelude to that, how do you think the Biden administration is going to be able to balance the competing views of the progressives and the moderates within the party, and particularly if you guys are right that it's likely that the Senate remains in Republican hands, and so they would have to approve these nominations?
Yeah, that's really going to be an interesting dynamic, right? Biden in that case would be the first president since George Herbert Walker Bush in 1989 to assume the presidency with the Senate in control of the other party, right? So it hasn't happened much lately. And let's be honest, the Senate was a very different place in 1989 than it is today. And so that'll be a big challenge. And I think there'll be some give and take that the Biden administration will have to go through when it comes to nominees that may or may not be, confirmable. And it could be where, a Republican-controlled Senate doesn't always openly reject them, but they could slow walk them, right, and make it much harder for people to be considered in a timely fashion. And so, if that's the case, I think you'll also see part of that balancing act buzz between sort of the progressives and the more moderate wings of the Democratic Party play out in the form of sort of senior staff appointments, and then the use of acting positions, or people asked to fill some of the roles in an acting capacity. And that's obviously a less than ideal standpoint from an administration's point of view, because you don't have the same sort of authority as you do with a Senate confirmation. And frankly, some court cases have proven that it's even harder for some of the decisions made by actings to stand up in court. But I do think that that's kind of a backdoor approach. If the front door gets closed or isn't open as wide as the Biden administration would like it to be based on how Senate Republicans handle their nominees, then I think you're going to see this backdoor approach. And in some ways, a more progressive nominee or a more controversial nominee in the eyes of Republicans who gets blocked from a full confirmation wouldn't necessarily be able to be stopped from sort of that backdoor approach, depending on the agency or the department. So I think you'll see a mix of those things, and in some ways that might help the Biden administration because their hands would be tied in terms of Republicans when it comes to some of the more controversial nominees. On the other hand, they can sort of try to get a few folks in through the back door.
Yeah, there's no doubt that it leads to just more consensus picks. I mean, if it's, 50-50, 51-52, whatever the margin is, every senator is going to just have that much more powerful, that much more power going into the next Congress. So the Biden administration is really going to have to make sure that they're working hand in hand with McConnell and Schumer, that they can get 51 votes for all nominees, which, I think is going to be challenging for kind of the Elizabeth Warren-esque type disciples getting through. I think it's going to lead to more kind of consensus type picks with the financial regulators.
And Dwight, you talked about the musical chairs among Senate Republicans for the committees.
Yes.
Similar deal on the Democrat side, or more status quo going forward for Senate committee leaders?
Yeah, good question, and I should have clarified. More status quo when it comes to Democrats, right? Part of that is the fact that Democrats do not have the same term limit rules within their caucus when it comes to being chair or ranking member. And secondly, you happen to have very little turnover in terms of retirements or defeats. The only Senate Democrat who has a ranking member spot that would change hands because of what just occurred is Tom Udall, because of his retirement from New Mexico. And so you're going to see pretty much the same crew of Democratic ranking members or chairs if they happen to win the chamber back. So for finance, that's Ron Wyden, who many of us know and have worked with on a number of these housing tax credit issues. And then the banking committee, that remains Senator Brown. And as a reminder, Senator Brown is in that position as the top Democrat on the committee because more senior members like Jack Reed and Bob Menendez decide that they would prefer to have the ranking member or gavel at another committee. So in the case of Jack Reed, that's the Armed Services Committee. In the case of Senator Menendez, that's the Foreign Relations Committee. And so that's what allows Sherrod Brown to then be next in line and to continue in that role. So I think we're going to see very little change among top Democrats on the committees.
We also have a question back on the GSEs. So if it may be less than likely that there'll be legislative action, do you, and that the Supreme Court might make a ruling to permit the Biden administration to have its own nominee at FHFA before the end of Mark Calabria's 5-year term. Do you anticipate that Calabria might take steps maybe even before January 20th that would lock in some of the direction that he's been pursuing to recapitalize the GSEs and release them from conservatorship, or do other things along those lines?
I think the short answer is yes. We do expect that. And I think the question is really maybe what's the full extent of some of those changes. And there's a couple of different ways that can happen, right? One is, of course, the completion and finalizing of the proposed capital rule, right? There's been a lot of discussion and speculation that that's likely to be completed before the end of the year, right? And so undoing that rulemaking, if a new director wanted to, would take some time, right? Once a rule is final. And that's one way. The other way, of course, is any amendments to the PSPAs, which, as we know, have to be signed by both the FHFA director and the Treasury Secretary. And so I think there is an expectation that Director Calabria and Secretary Mnuchin may very well have some additional amendments to the PSPAs. What I think remains a bit of an open question is, to what extent do they use that amendment process to the PSPAs to really sort of try to make some additional changes to keep that sort of path, keep moving down that path of getting them out of conservatorship. So, that I think is still a little bit of an open question, but that is, I think, a real possibility for sure.
So for those not following so closely, the PSPAs are the preferred stock purchase agreements that Treasury and FHFA and the GSEs all signed back in 2008 when the GSEs entered conservatorship, and they really govern at sort of the macro level a lot of what the Fannie and Freddie can really do here, including what their payments need to be back to the Treasury to fulfill their requirements for getting the funds that they did get. And there's a lot of money, hundreds of billions of dollars, that is still outstanding because it's in the form of preferred stock. And so the payments on that preferred stock have been dividend payments. They don't actually whittle down the principal. So there's a lot of power in those preferred stock purchase agreements. They've been amended, I guess, now 4 times, and could be amended again either by the Trump administration before it leaves, or thereafter in the Biden administration.
Yeah, good clarification, Buzz, and thank you for mentioning that. The other thing worth noting is, and some of you have probably seen, there have been several recent high-profile announcements by senior executives at both Freddie and Fannie, including Freddie CEO David Brickman, announcing their departures. And so people are wondering and trying to read the tea leaves, right? Is that somewhat of an indication that they're, thinking that the direction of getting out of conservatorship is going to be slowed? They don't want to be around for, this sort of extended period of time where it's unclear what their status is, or is it unrelated? And, we'll probably start to hear more of the backstory as time goes on about some of those departures, but that is adding, I think, a little bit of to the discussion around the future of the GSEs.
And so on other personnel matters, what are you guys hearing about possible nominees for key cabinet position or agency positions?
Yeah, we're starting to hear some names that I'm sure others are hearing about, but I can try to give a little color and flavor on some of that. We'll start with Treasury, just given the importance there, and obviously it's usually one of, or almost always is one of the first 4, the big 4 as they're known, with Defense and Secretary of State and the Attorney General. And those are the ones that we would expect the Biden administration to announce shortly after Thanksgiving, certainly by early December, at some point in early December, and so that the Senate can begin to prepare and get ready for those hearings after the swearing in on January 3rd, all with the goal of having them ready to be voted on very quickly after the inauguration on January 20th. And so Treasury Secretary, I think, there's no doubt that the Biden administration is going to continue to highlight and has made clear they want some firsts when it comes to the Treasury Secretary. And so that needs to be either a woman or a person of color. And that is a very important priority. And I believe, that's why we're seeing names like Lael Brainerd from the Federal Reserve, also a former senior Treasury official, and Raphael Bostic, who, as many of you know, is the Atlanta Fed president, and I would say is rising up in terms of the rankings, or a bit of a rising star for a senior Biden administration position. There's a number of senior Democrats, and I've heard from a couple of Democratic senators in the last week, and they speak very highly of Mr. Bostic. It does not mean there is not a lot of support for, I think, a Brainerd Treasury Secretary nomination as well, but Bostic, I believe, is someone that is going to get serious consideration. If I had to guess, it's one of those 2. I know Janet Yellen's name has been in the press recently. That seems a little bit like an odd fit to me. A monetary policy economist running Treasury, which is much more of a political, sort of job than the Fed chair job was that she had. Not that she isn't capable of handling it and doing it well, but just doesn't seem like an ideal fit to me. And so if I had to guess, I would guess it's one of those 2, Brainerd or Bostic. And then whichever one doesn't get it, I think would also then be well positioned to be the next Fed chair. Remember, Jerome Powell's term as chair expires in February of 2022. That would basically be 1 year for the new administration. That kind of continuity and overlap with a Fed chair, when it's a Fed chair that everybody seems to think is doing a reasonably good job, usually is exactly what a new administration wants, to send signals to the market and to international, other central banks and the international markets. So I would expect Powell to stick around for some period of that year, if not the whole year. So those would be the first 2 I would point to at Treasury. And then I think, obviously the other, departments that are going to be of, serious interest are, of course, HUD. And, there are multiple names floating around there. I would just caution, I know members of Congress have been named and floated, and Cedric Richmond has already been named for a senior White House job. But as Brian pointed out earlier, if the Democrats have 223 or 222 or 224 seats as their majority, and they have a 4, 5, 6 seat, sort of majority in that sense, where you can't go below 218, then they're going to be reluctant to have too many House members tapped for jobs, even though they could come from very safe districts. The time involved in getting those special elections held and getting them back, getting someone back, is going to be something that I think the administration is going to be very sensitive to. So even though we hear names like Karen Bass and others for some of these positions, I think that's going to be a factor. And then throw in the fact that California members might also be in the mix to replace Senator Harris, right? Governor Gavin Newsom, excuse me, is going to get to name a new senator, which is obviously a big deal. And some of those California House members who have been rumored to be part of a potential Biden administration, like Karen Bass, who was a VP finalist, may very well be in the mix for the Senate job. So that's some of the early names I'd highlight.
Do you expect, Brian, you want to get in on this too? Or?
No, I totally agree with all of those names. I mean, for FHFA, certainly there's a couple names on the transition team, Eric Stein, Julia Gordon, and others that have been thrown about. The OCC, a lot of people are looking at kind of former OCC employees. You've got Paul Nash, Charles Yee, Amy Friend, are just some names that have been thrown about. So I think it'll be known names for a couple of those high-profile agencies.
So let's turn a little bit to the likely agenda from the Biden administration, particularly given the challenges of getting things through the Congress. What do you see as the Biden administration's overall priorities before we get into housing and community development matters? Just overall, yeah. What do you see the priorities of the administration being on the legislative front particularly?
Yeah. I mean, I think the important thing to note is just briefly, Buzz, that in many ways, it is going to be an administration of executive orders and rulemakings and enforcement from the regulatory agencies if they don't have control of the Senate, for Democrats, that is. And a lot of executive orders, as we know, are going to be happening on day one to overturn numerous executive orders from the Trump administration. So that's going to happen immediately. From a legislative standpoint, I think it's all going to come down to addressing the COVID situation that we're still going to obviously be dealing with early next year. Obviously, we're on a terrible trend line at the moment. The holidays are coming up. It could get a whole lot worse before it gets better. And I just think that it's going to be kind of a very, very COVID sort of focused initial quarter or 2 quarters or a year for the administration in many ways. Now, a lot will depend on, does any of that COVID relief, for example, get addressed during the lame duck, as I highlighted earlier? If it doesn't, and they're really sort of in dire need, and some of that's going to be, like I said, vaccine distribution and other issues that are going to require additional funding, but also require some planning. I think that's a big focus. And then second, and maybe related, and frankly very much connected, is the economic impact of what we're seeing from the pandemic. And so some kind of economic stimulus beyond the kind of more immediate COVID relief. And to me, that of course is infrastructure, right? And the infrastructure notion that's been around for a long time. We joke in Washington that it's always infrastructure week and nothing ever seems to happen. I think you can throw that out the window. I think we're going to actually see something on infrastructure. I think it's clearly an area where Biden could find bipartisan support very early on. Trump could have done the same thing. There would have been a lot of bipartisan support for an infrastructure package in 2017, and he totally ignored it and chose not to do it. And that starts with the basics. It starts with reauthorizing the highway bill long term. But I think it grows out from there. And that's where obviously, housing is a part of that infrastructure discussion. And as we know, there's bipartisan support for expanding the housing tax credit issues and NHIA. And I know we can, that bipartisan positioning of infrastructure broadly and making sure that that is economic stimulative at the same time is, I think, going to be a very, very big focus for the administration, along with and connected to the COVID response.
Brian, do you agree? You think the Senate Republicans are going to want to play ball on an infrastructure package?
Yeah, I think for both COVID and infrastructure, size and scope matters. So I think, they certainly want to play ball on both issues, but the size of these packages, a lot of Republicans honestly just campaigned on kind of not going big on some of these packages. And so I think it's going to be tough for them to come back post-election and vote for a large package on either issue. On infrastructure, it touches multiple committees. I think on the housing provisions, I actually think there is quite a bit of bipartisan support. Of course, you've got on the transportation side, everyone wants to build highways, but things get bogged down when you start talking about the gas tax and things like that. So I think that the devil's in the details for both those, but I do think that there is bipartisan interest in getting something passed on both those issues.
And in terms of the COVID relief package, is there also bipartisan support for some kind of emergency rental assistance?
Yeah, I mean, I don't think that has been viewed as a top priority for the Republicans. I mean, certainly kind of looking at the skinny bill that they've worked on, it's been much more narrow. So I think that's going to be kind of one of those add-ons that is going to have to be dealt with in the negotiating room. Dwight, I don't know if you have anything to add.
Yeah, that's exactly right, Brian. And I think the one dynamic that sort of maybe is going to now be added to those discussions, and we know Senator Crapo had been looking at some options. Senator McSally, I know she's recently lost her reelection, but had been involved in those conversations with Crapo, and so we know that they've given some thought to the rental assistance. It's obviously would be at a much lower number than Senate Democrats and House Democrats have been asking for. But I think what changes the dynamic a little bit now is, frankly, the looming expiration of the moratoriums, right? And the fact that we may have a real eviction crisis on our hands in this country, and that may help kind of color that discussion a little bit. And I would hope if some COVID relief can get done on its own in the lame duck, or can get tacked onto the appropriations bill, as I said earlier, in a few sort of limited cases, that this real growing potential problem of an eviction crisis in this country can allow the rental assistance to be in that mix on an appropriations bill. But that would be the goal.
What about on the spending side? The Biden campaign had a lot of money in there for expanding housing, including making housing vouchers and entitlement for renters with incomes below the poverty line or 30% of area median. Are those things now less likely because of the Senate Republican control, or do we see a path to significant increases in spending?
I think that's going to be very challenging, right? I think as we've all been sort of discussing internally, you're going to start to see more and more deficit hawks come back to life after after the last 4 years, and I think there's going to be real difficulty in any significant large-scale new spending. It doesn't mean that there aren't some opportunities for additional spending, in areas that, again, can be targeted and can be, to address very specific, issues. One thing that helps, of course, in that space, and we'll see where the appropriations subcommittee gavels and ranking members end up. But as we know, historically, when a chair and ranking member of the right appropriations subcommittee have a good working relationship, those things can sometimes be worked out. And so So I think that will be the challenge, but it'll have to be sort of very targeted. I don't think we're going to see some of the, widespread or more ambitious programs and initiatives that the Biden administration, has campaigned on. That's going to be a challenge.
That's right. Yeah, I mean, I think kind of some of the, I know Waters has kind of championed in the past kind of $100 billion kind of package on affordable housing. I think that that's going to be challenging with the Senate divided as it is.
Do we expect Republicans now will focus more on deficit reduction, or?
Yeah, I'm afraid so. It's all about getting religion at the right time, and and with a Democratic administration, I think they're gonna decide it's the right time.
We'd be remiss if not asking your views for this audience on the future of the OCC's CRA rule. Do we see that moves forward? Do we expect a Biden appointed comptroller of the currency to put the brakes on that? What do we see?
Yeah, I think given the opposition to what Otting had proposed and the efforts by the OCC, by a number of stakeholders, as you all know well, and by a number of Democrats in the House and Senate, I would have fully expect a Biden appointed comptroller to immediately try to put the brakes on, and then once you have other regulators in place, and I realize that the FDIC, for example, Chair McWilliams can stay in the chair spot until her term expires if she wants to, which is in 2023. Now she'd be doing that in the minority eventually, which is an unusual situation to be in, obviously. And so the joint rulemakings could be challenging for a Biden comptroller. But I would expect that, yes, they will definitely do what they can to put the brakes on the OCC's efforts to date, and try to take a totally different look and a different approach.
So we're getting close to wrapping up. Just wonder, do you guys see other broad tax legislation happening around corporate tax reform, or cleanup of issues remaining from the 2017 legislation, or other things that could also create opportunities for, say, the affordable housing or other tax agenda items?
Yeah, I'll speak real quick to the corporate and individual and then go to housing. I do not see a path forward on raising kind of corporate tax rates or individual income tax rates. I know that Biden had obviously campaigned on that, and could get it done actually with 51 votes technically in the Senate. So I guess the Georgia Senate seats do matter in that sense, but I think that's kind of off the table right now. I do think on the housing credits, unlike the corporate tax increases, which don't have any bipartisan support, and same with kind of the individual rates, the low-income housing tax credit, of course, does. And if that bill was on the floor tomorrow in the House, it would pass overwhelmingly. I think there's enough support in the Senate if it were given a separate vote. Now, we all know that it probably won't be given a separate vote, and it'll be included in a larger package. As we discussed earlier, infrastructure package seems like the best fit for some of those housing tax related provisions. You, of course, have the tax extenders bill that is later on this year, has to be dealt with. That would include kind of the new markets tax credit. That would include some energy related tax credits. Neil and Brady, who are the leaders of the Ways and Means Committee, keep saying the right things, keep saying that they want to get this done. So I think that still remains a very possible and likely opportunity. But as far as kind of the bigger corporate individual income tax, I just don't see it. I think that our best bet is for housing related matters is to try to catch a ride on any infrastructure package.
Well, unfortunately, I think we're about out of time. There are a lot more questions in the Q&A that we've tried to address as many as we could, but there are still some left undone. But I guess that's the nature of these things. So I want to thank you both, Dwight and Brian, for your expertise and insights. Again, I want to thank all our sponsors for today's session, led by PNC Bank. And stay tuned for additional webinars that will be launching over the next couple of months. As I mentioned before, we're going to focus on racial equity and affordable housing finance issues. So with that, we hope you have a great rest of your day, and thanks very much for attending.